Welcome everybody. It's not good to be with you, but it's good to hear you at least, I hope, soon, and we'll start the Q4 and last year presentation. Let's move on, Martin, please. So maybe technically, before we start, I understand you can use the chat to ask questions, and we will open by the end of the presentation ability to just ask questions directly using the voice, so use the preference whichever you like. Marcin, anything to add technically?
I think that's it. We can start.
Yeah, I have to start my video as well. Sorry. First about Q4 highlights 2020. A very good quarter. We are happy with it. We're happy with the whole year. Actually, this year was record for the company. The growth was pretty significant, as you have seen in the numbers. We hope to continue. What has contributed very much in the Q4, especially dedicated solutions, is one of our three major business lines, and in this business line we were underperforming usually historically. And in 2020 we've seen a significant profitability shift, the size of the business and profitability very much contributing to the results of the company. In the financial segment, multi-channel, omni-channel solutions and mobile banking have very much contributed to the efficiency growth, profitability growth, and size of the business, of course. And this was a positive thing that happened. And also in payment, in Q4, we've seen mostly contribution from POS-related services, ECR, and independent post-deployment, yes. But overall, throughout the year, e-commerce has as well very heavily contributed to the growth of the business and to the results. In Q4, the dynamics is flatter, but the reason is that in 2019, we had a couple of big 3D Secure deals that have increased the comparable base in 2019. Additionally, you see in e-commerce an effect of the exchange rate in Turkey, where the Turkish lira has strengthened, flattening a bit the growth in Q4 compared to other quarters. Something we don't usually mention, but in this case, it's pretty exciting and fresh because it happened in the beginning of January, and we don't mention if it's after the Q4. We have acquired not a big business, but artificial intelligence machine learning business of about 30 people, which we are very optimistic to grow and to support our existing business lines with their tools, automation tools, especially for sales automation and analysis. And we think this will be a very strong add-on to the future business of ASEE and Payton. Let's move on, Martin, please. The highlights for Q4, mostly, as already mentioned, were the deals in mobile banking adaptive elements platform for two big international banking groups, digital origination solution, which grows very nicely, and this solution is for selling online through online channels and mobile channels financial products to its customers. Then PKI security and mobile licenses in Croatia, instant payment in Romania. Also some BI solutions in Serbia. In dedicated solutions, we see a nice growth of Live, which is a collaboration tool. It's not only contact center, it's our own proprietary solution that we grow, develop, we invest into this help desk solution, and this is selling quite well. BPM is a business line which we are trying to develop and grow much more. We see this line mostly developing now in two countries, Romania and Serbia, and we've signed in Romania in Q4. And last here on the slide is something we don't usually mention because it's a third-party solution, but this third party is one of the top Magic Quadrant players, the top in software monitoring, tracking quality of the software, and they are selling only in subscription mode, mostly to bigger accounts, bigger tickets, so it's very nicely contributing. We have a very good partnership agreement with them, very nicely contributing to our recurring revenue in Turkey. If you look at the pattern on the next slide, you can see a lot of deals in e-commerce within the NestPay, which is payment gateway, virtual POS solution, and also tokenization solution, Merchant Safe Unipay, where we signed many deals in the region and in Turkey. Yes. Additionally, 3D Secure is an e-commerce product, security product that sells very well, and we see bigger and bigger opportunities for this in emerging markets, which haven't adopted more strict regulations in the e-commerce yet, and they will require this solution to fulfill these needs. In processing, which was not the best year for processing because of COVID, because of lack of tourism and some transactions related with this, but we have signed a new microcredit organization in Macedonia and quite a nice international bank for payment card management. Yeah, so two nice deals, and we are pretty optimistic about this business line for 2021. In ATM and POS, we had just application or integration of China Union Pay payment system for UniCredit in Serbia, and a nice ATM and maintenance deal in Macedonia. And let's look at the numbers now. Marcin, please show.
So we'll do the numbers now, and we'll do them in the same, let's say, layout as usually. So we will start with Q4, a few slides about what happened in the last 3 months of 2020, and then in the next section we'll summarize the whole year for ASEE, so a more longer term view. So starting with Q4, as Piotr mentioned, Q4 is traditionally a very strong quarter in ASEE, and it was also the case in 2020. Yes, as you can see in the numbers, they are pretty strong, with 74 million in revenue and almost 10 million euro in the operating profit, and this means that we are still on double-digit growth ratios, with EBIT growing 20% again in euro and almost 30% in Polish zloty because of FX rates. And so no reasons to complain. Very good, very strong quarter. I will show you details of the operations in the next 2-3 slides. And now let me only tell you what happened below the operating profit line. So in the financial activity, we had 400,000 euro loss. That was more or less expected, yes, because this is regular cost of interest expense, both for credit lines and for lease liabilities. And on top of it, we had some negative impact of for negative foreign exchange differences in Turkey due to lira. Lira dollar movement. Lira was strengthening, and hence the variances. For tax rate, for effective tax rate, it was on 16.9 level, 16.9%. This is a bit higher than in Q4 of 2019, when it was 15.6. The difference is from higher rates in a few big operations, including Macedonia, Serbia, and Turkey. So there's again nothing surprising about it. As you can see, we are also presenting non-IFRS numbers, but in Q4 2020 they are very close to our reported IFRS numbers, so no need to spend time on them. So let me now tell you about the segments. And already Piotr mentioned that, and this is confirmed in the title of this slide. Dedicated Solutions is a segment which contributed most to the good results of the fourth quarter of 2020. This is the bottom line in the table we are presenting. And as you can see, Dedicated Solutions grew by 7.4 million euro in revenues, and by almost 2 million euro in the operating profit, reaching 2.6 million euro operating profit in Q4 only. It is a very good result, but it's also fair to say that Q4 of 2019, so comparable data, was not a very good quarter for Dedicated Solutions. So this base was pretty easy to beat, but it seems that it was beaten by far. This growth in revenues is coming both from reselling from third-party solutions and integration services, as well as from our own solutions. Okay, in this first part of Dedicated Solutions segment, the growth was coming mainly from Serbia. And in own solutions, the growth was in a few operations, including Serbia, Romania, and Turkey. And this is also a part of dedicated solutions where we reported higher growth in EBIT, higher EBIT. Yes, this is in own solutions where we increased efficiency and profitability in major part. What about other business lines? In payment, as you can see, the growth in revenues was not so spectacular. It was 1.6 million up. And let me take you for a second to the next slide where we have details of this growth split into business lines. So this 1.6 million euro higher revenues are coming from POS terminals business line mainly. And this is where majority of newly acquired companies contribute, but also we have growth in this, let's say, old organic business as well. So new business lines include ECR companies in Croatia that we acquired in the middle of this year, and also some other smaller businesses that we added during the last 12 months, or actually, 12 months. And the original old business grew mainly in Spain and Portugal with the Necomplus companies, also in Albania. So a few reasons for this 2 million growth, as you can see it. For other parts of payment segment, in processing and ATMs, we didn't have much big differences, and in e-commerce, we can see the slightly lower revenues, also because of FX rates effect, as Piotr explained a few minutes before. After this, or following this 1.6 million growth in revenues, there was a small drop in the operating profit and the EBITDA. But to understand this drop, you have to realize that in Q4 we made a non-recurring one-off write-off of assets in this business line. ATMs that we use for MoneyGet, for independent ATM network. We reviewed their values, and because of, let's say, worse performance of this line during 2020, we decided to write them off partially, and it had an impact of 750,000 euro on our profits, and this is one off again. So excluding impact of this write-off, the operating profit and EBITDA would go up slightly. So this write-off had an impact on ATM part of the business. In other business lines, the results were comparable to prior year, and there was small growth in processing, the small part of payment segment, that also due to these new contracts that were mentioned in the earlier slides. Okay, what happened in banking? Banking traditionally has very strong fourth quarter, and it was the case in 2020. So banking ended up with 4.7 million in the operating profit. This is 300,000 euro more than in the same time of last year. And well, actually, this is a very, very good result from banking. And last year also Q4 was very strong, so we didn't expect a much bigger growth. And we are very happy about these results and profitability that banking reported after Q4. The growth is coming mainly from mobile solutions. This part of banking segment had a very good year and contributed a lot to better results in banking, as we can see. Okay, so this was about segments, and now let's look at countries, geographies where we operate. I will focus only on those biggest ones. So looking top down, let's look at Croatia. Croatia is very strong, and it has been very strong for the last 2-3 years. As you can see in Q4, Croatia reported 2.1 million euro in the operating profit. This is a 400,000 euro growth compared to last year, and this is mainly coming from banking, from mobile solutions, as I mentioned before. In Iberia, where we report Spain and Portugal, there is also a significant improvement in the operating profit. As you can see, they reported 700,000 euro compared to a small loss in the same time of last year. This improvement was possible thanks to new contracts in the POS part of the business, but also a small improvement in BPO, business process outsourcing part of the business, where we reduce the scale of business, reduce costs significantly, and also it helped to achieve better results. Looking at other big operations, certainly we should mention Serbia. Serbia is reporting very good results, another quarter in a row, and they ended up with almost 3 million euro in the operating profit for Q4 2020. So this is, again, very good result and very good year for Serbia. When you look at the revenue line, it's even higher growth, because a big part of this growth and increase in results is coming from reselling of third-party solutions. That's why in the revenues it looks so dynamic, and the impact on the operating profit is slightly lower, as you can see, because in general reselling is done on lower margins than our own services and solutions. In Turkey, we have a different situation. So revenues are not growing so dynamically, but at the same time, the growth in the operating profit is spectacular. Yes, in Turkey, we had 2 million euro in Q4 2020. An improvement is coming from e-commerce, but also from dedicated solutions, including a company that we acquired at the end of 2019 called Mobvan, that is reported on the line within dedicated solutions that offers own solutions. Okay, so generally speaking, very good quarter. In many big operations, we improved our results compared to prior year, and we ended up with almost 10 million euro in the operating profit. So this is a record high result for ASEE Southeastern Europe, and we are happy about it. So this is about Q4. Now let me quickly summarize the whole year. Comments for consolidated results for the whole group for 2020 will not be much different from what we discussed in Q4 slides. So double-digit growth with almost 30% increase in the operating profit compared to the prior year. So generally speaking, very good results. A part of it is coming from acquisitions, and it's fair to say that that it's not only organic, but the impact of acquisitions is not significant. Yes, in the revenue line it's almost 12 million, but in the operating profit line it's less than 100,000 euro. Okay, this number looks small, but this is the case. Included in this less than 100,000 euro is also the amortization of PPA that we recognize on acquisitions, and this is eating up 430,000 euro. So when you add this back, it's gonna be more than 500,000 euro operating profit. And also we had one-off in Q2 in the Mobvan, the company in Turkey, where we wrote off a part of capitalized software development expenses in the amount of more than 300,000 euros. So all in all, the operating profit of newly acquired companies would be almost 800,000 euro, but we report less than 100,000 euro in this table. Okay, what happened below EBIT line? No surprises here. Okay, so financial expenses as expected on the annual for the whole year they are almost 900,000 euro, and this is again as expected, mainly composed of interest expense on loans and lease liabilities. When it comes to effective tax rate, it was 16.6% compared to 17.3% last year. So again, not much different, and no need to spend more time on it. In here you can see that non-IFRS differs a bit more from reported numbers. What we have here is PPA amortization that I mentioned before, the cost of share-based payment that we finalized in Q2 2020, and also financial expenses and income related to M&A deferred payments. So these three elements are making the difference between reported EBIT and PAT and non-IFRS numbers. Okay, let me take you to another slide with segments, and let's go top down now, and let's start with payment. As I said during Q4 comment, payment was the fastest growing line in our business in 2020, and the majority of this growth comes from POS terminals business line. Okay, as you can see here, out of the 17.3 million euro additional revenue in 2020, 12.3 came from POS terminals. And again, this is thanks to new acquisitions, but also thanks to organic growth in old operations. So we are very happy about this growth, and we are also happy about growth in other parts of payment business line, including ATMs, where you can see we had additional 3 million in sales. And this is despite independent ATM network MoneyGet, which suffered because of COVID pandemic restrictions and almost no tourism in the region. So they reported much lower revenues than the year before, but still we were able to grow by 3 million euro in ATMs. E-commerce, on the other hand, benefited from the pandemic, and we can see the volume of transactions in the internet is growing or has grown very much in 2020 compared to the previous year, and it had let's say impact on our sales and on our results from this part of business. Processing is not a big part of our business, but it had a bit slower year. Also because of the pandemic and the fact that because processing is where you use physical card and physical terminal, okay, payment terminals. So we had fewer of these transactions, and we had fewer of DCC transactions that are mainly made by tourists coming to the region, and again, not many tourists in the Balkans in 2020. The 17.3 million growth in revenues was followed by 3.6 million growth in EBITDA and 2 million growth in the operating profit. Basically, all business lines were reporting higher profits. And included in these numbers, we have this write-off that we mentioned during Q4 comment. So 750,000 euro was one of that is included in these numbers. Now going down to banking, you can see that in banking the revenues were 46.4 million euro after growth of 2.7 million in 2020, and this growth was mainly made by omni-channel, by mobile solutions, and the growth in the operating profit was spectacular. Yes, I think you can see it also in this bar with profitability that efficiency went up as well, and we did this growth in revenues with almost none increase in known costs. And what also helped here were a few bigger projects with significant license component, and this is obviously a more profitable structure usually. So these elements helped to achieve almost 12 million euro of the operating profit in banking. Again, very good number, record high, and we are very happy about it. And last but not least, dedicated solutions. The very strong fourth quarter helped to report very good results for the whole year. 4.5 million up in revenues, reaching the level of 80 million euro for 2020. The growth was both from reselling and from own solutions, but the improvement in the results and that you can see on the right-hand side of the slide, 2.3 million up in the operating profit was mainly thanks to better efficiency in own solutions part of our business. So this is where we observed better results, better efficiency, and again it was mainly in bigger operations like Serbia, Romania, Turkey, and also in Spain, thanks to these restructuring actions that we took in BPO. Okay, so this is about segments in 2020, and let me also tell you a few words about countries, geographies for the whole year now. And just again, not to repeat the same comments, I will focus on biggest differences and biggest operations. So going again top down, very good result in Croatia because of banking. We mentioned that very visible improvement in Iberia, in Spain and Portugal. This is thanks to POS business and some savings in BPO. And this is much closer to what we expect from Necomplus business in the future than the not so good 2019, as you can see by comparison. Stable results in Macedonia, Romania, to mention the big operations, and very good result in Serbia, 10.2 million operating profit for the year. All segments going up, all segments improving their results, with banking being the most significant contributor to this growth. So again, a very good year for Serbia. And in Turkey, a very good results as well. As you can see, almost 6 million euro in the operating profit after 1.5 million, so more than 30% growth year over year, thanks to very good e-commerce that we mentioned, and also thanks to improving dedicated solutions. So these are the most, let's say, important contributors to the growth, and again, the comment is basically in all bigger operations we are able to improve our results, or we were able in 2020. Now let me tell you a bit about cash flow and liquidity. So in the first slide we are presenting a balance sheet snapshot as of the end of the year. So you can see that following very good cash flow during the year, our net cash went up by 17.5 million euro compared to the end of 2019. So we are right now, or at the end of the year, at almost 24 million euro net cash. And this is despite paying 9 million euro in dividend in July, and also investments that we made during the year. And I'll show these investments on the coming slide. So again, very good cash generation during the year, and basically all our profits are translated to cash. We use this cash flow also to repay our liabilities, bank loans. As you can see, the net balance went down by almost 12 million euro compared to the end of 2019. So this is again a positive message in improving the structure of our balance sheet. And one last thing I wanted to mention, looking at this slide, is high levels of receivables and liabilities, short-term liabilities. This is a regular situation at ASEE at the end of the year. Okay, following very intensive Q4 in business, we have significant numbers in short-term liabilities, short-term receivables. And in the first months of the year, you can expect that we will be repaying a big part of these liabilities. Last year, we repaid in the first quarter only, we repaid 18 million euro in liabilities. So I'm telling you this because I want to prepare you for the fact that in the first months of the year, the cash flow will certainly be slower than in Q3, Q4. Okay, this is a kind of seasonality that we can see in ASEE, and we have seen it for a few years. So I'm sorry, we are expecting it, and this is again nothing unusual. What happened in cash flow, in dynamic cash flow? Just a few words here. Certainly very good results and very strong operational cash flow is a good starting point for this analysis. So you can see it's growing year over year, and the year 2020 was record high again. The investments in infrastructure for outsourcing and infrastructure for independent ATM network were smaller than the year before. Yes, so the appetite of banks for new outsourcing contracts was smaller. It's hard to say if this is because of pandemic or because of some, let's say, saturation in the market, but we can see that it is not as intensive as it used to be in 2019. Investments in M&A on the level of 4.2 million euro, only 2-3 smaller acquisitions during the year 2020, but there were also a few payments, deferred payments from acquisitions made in previous years, and this is where the cash outflow is coming from. Other capex is on regular level. So starting from this strong operating cash flow through investments, you can see that free cash flow was pretty high during the year, and we used it for debt service. Yes, as mentioned on the previous slide, The debt service was almost 16 million. That increase was not significant. It was, I think, mainly done in Serbia because of new projects. So we decreased our debt balance significantly. And the conversion of our results to cash flow remains on a very high level. As you can see, operating cash flow to EBITDA is 93%. So this is a level that we expect, and it shows that this is let's say a healthy profit, not that converts into cash. So we are, let's say, we feel prepared to pay the dividend that we declared yesterday. So we are planning to pay 1 zloty per share. So I think it is dividend yield in the range of 2.5–2.6%. So this is more or less it about liquidity and historical data. Now I understand Piotr will take over and will tell you a bit about our outlook for 2021.
Hi. So traditionally, I mean, I don't know to what extent you participated in the other conferences, but we always provide some guidance for the year, and we start with backlog. So you can see here on this slide that for the whole group, the backlog for the year and for the first quarter is growing very nicely by 11%. We are very glad with these numbers, and we feel and we believe this is the base to believe we can achieve growth, and we have positive surprise for the investors, yes, for the market. If we look how this is split, we can see on the next slide that definitely bigger backlog is for banking and dedicated solutions. Here the result is mostly coming from mobile banking, but also core banking solutions, where we see some new deals popping up even in the beginning of the year, because these data are from February. End of February, so basically this is building up very nicely. In payment, it's more, it's not as dynamic, it's 5%, but we also believe these numbers will and create a base for growth for the whole business, and we are pretty optimistic with the processing and e-commerce being the front runners for the growth, but also independent post-deployment and ECR business, where we see some growth in the horizon, yes. So what more can we tell you about the whole year that we just started? We do believe that this year, the COVID will continue, but about this topic we know as much as you do. The impact on the business overall was not bad in 2020, and we still believe the institutions and banks will be digitalizing their business, which should positively contribute overall to our demand for our solutions. On the other hand, we have a small business line, which is independent ATM, which is mostly based on tourism. In our assumptions, we assumed a better year than 2020, but much worse than 2019. It's a bit of a guessing how this will end up, but this business line was with a significant loss in 2020, so it can be both a positive and neutral surprise to us. We believe in, as I mentioned, mobile banking, channel banking, core banking. In e-commerce, I mentioned an EPD and ECR, that this will contribute, but also BPM, business process management, we do count within the dedicated solutions that this will contribute to growth, resulting from the trend of digitalizing the solutions, and we are trying to develop these very much. On top of everything I said, we started 2–3 years ago acquisitions more aggressively on the market, yes, again, and only few were closed in 2020, but we believe much more closures we can expect in 2021. They will all contribute to the existing business lines. In some cases, we do hope, like this machine learning, artificial intelligence one we made in the beginning of the year, they will be allowing for cross-selling and utilization of each other competences within business lines that we have. Some of them will be quite small. They are all done locally, regionally by our companies. Some of them will be bigger ones, but we can expect even few of them to happen in the second quarter. But majority of the impact we would expect in 2022, not 21, from these, and we are continuing these acquisitions. On the other conference in Polish, we were asked the questions that I will answer, how many? And the answer is it's very difficult to judge because, as you know, with M&A, until the last moment, you don't know if it will happen, and small things can affect the success of the acquisition and not delivering it. But we believe something around 5 is 5-6 is something, including small ones on the group level, is realistic to close within 2021. And now we are open to questions if you have any. I think we can open the voice option so you can ask them directly, or you can chat, or you can speak, please. Just a moment.
Yeah, hello, Christopher Sandman here. Can you hear me?
Yes, perfectly.
Yeah, thank you very much for a very good presentation. A lot of details and very good. So I think it was really useful. But to get a better understanding of the backlog, what are you seeing on the profitability side? Is it some kind of pressure, or is it continuous as last year?
I would say, on profitability, I have very similar comments since many years, that we do see an upside within our operations resulting from optimization of how we run the business. And this doesn't mean necessarily only cost cutting. It also means management, resource utilization, utilizing maybe people more effectively with less experience, not always placing the most experienced people on all the projects. Yes. So all this, we believe, should allow us to increase the profitability. In payment, it's more, in most cases, not in all, in most cases, economy of scale. So there is an operational leverage where we have a certain variable cost, but we have also certain fixed costs. So as we grow the business, we do believe the profitability should grow, even though there is a margin pressure on this business. Yes. Okay. So overall, we don't see a huge challenge here. One thing maybe I haven't mentioned, which loosely relates to profitability, maybe short term, I don't think it will affect 21, but we are trying to start shifting parts of our business into subscription model from a classic license model. So this is also a strategic trend that we are betting on and investing into.
Do you have a specific target there for the share of prescription?
Well, no, and I'll tell you why, because it will be very imprecise. Yes, we are at the beginning of the road, so we don't want to put it as much as possible, but we know some of the solutions are not fit for this type of model, so we are trying to push it to the extent possible, but we don't know the deadline and the timing necessary yet to prepare some of the solutions for this, even though we have started with some of them already, such offering. Yes. But we are testing it now, how it works, what we are missing in the solution, in the cloud readiness, and in the contracting documentation and the whole proposal for the customers. But we are already in discussion with the customers on some of them, so this is happening.
And you took also a write-down in the, if I understand right, in the ATM business. And is that because you have this transformation from physical money to digital money, and that's all we can expect to see that continue over the coming years, or no, write down these assets, or?
No, this is not the reason. The write-off was in a business line, which was, and only in these parts of this business line, which we called shared ATM network. And we can divide this business into two groups. One is where the network ATM is serving the domestic users, customers, the inhabitants of a market, of a country, yes? But big part of this business in Croatia, in Montenegro, in Albania, biggest in Croatia, is dedicated only to tourists. It's located only in touristic locations, yes? It's earning mostly in 2-3 summer months, yes? And the major source of income over there is DCC, dynamic currency conversion. So basically, allowing to take the margin on the exchange rate conversion for the tourists. And you can imagine in this business, the outcome of the COVID was very negative, yes? and is this area of the business where we have taken or done the write-off.
Okay, perfect. On the potential acquisition,
Sorry.
Yeah, sorry. Okay, I have one last question maybe. No, on the potential acquisitions, if I may, on potential on valuation, because I mean, if you look on listed tech companies, valuation has gone up in the last year. Are you seeing the same thing in smaller companies also that you're looking at?
Well, yes and no. We are looking at smaller companies because the bigger ones are not accessible, or we don't find them even reasonable in terms of strategic long-term investment. Yes. So if we finance the investment from cash, not from own shares, yes, these valuations that in some cases are visible on the market are not rational by our payback, return on investment standards. Yes. Therefore, we are taking a bit bigger risk by acquiring smaller, less mature businesses, which are not on the radar screen of the big investors because they are too risky for them. Mostly risky from a managerial point of view, supervision point of view, yes. But we have a big experience in this, and so far we are pretty successful in integrating and bringing value from these businesses. Also, what I mentioned on the previous conference, it usually takes us, we don't want to destroy the value in the beginning after the acquisition, and then it takes us 2 to 3 years, usually 3 years, to start generating positive effects out of the acquisition, net positive effects. Yes.
Okay, thank you very much. Thanks.
You're welcome.
We have one more question. What is the materiality of Solver acquisition? What potential does it bring to reduce your cost and improve margins?
Okay. Thank you for this question. It was a small one. It's about 30 people in the ThinkSolver. One of our major targets is to grow the team significantly, and I'm personally engaged in this, in sponsoring this activity, of course, parallel increasing the business. We do expect the business for 2021 to generate about 300K profit, operating profit. Maybe there will be a positive surprise, but we want this to happen in line with major investments in the growth of the business, yes, which can cannibalize part of the profitability. Long term, we have big hopes with this business line, and I would like, it's more vision, yes, that we will be talking more in millions in a matter of years within this business line, because we are looking both organically and through acquisitions how to develop and grow this business line. Now, the biggest value added in terms of integration with our business is not on cost saving. It's mostly on revenue generation, and except for standalone, dedicated or off-the-shelf solution for sales optimization that they offer on the market, we see we can offer for the mostly financial sector, for the banking sector, optimization tools, products, which we can upsell on our existing client base. So this is where we see a quick win-win. But the biggest customers of the company today are telcos, yes, also financial segments, but telcos and e-commerce is more and more using solutions of this company. So there's many opportunities here, but as you know, the market is hot, but it's also crowded. Any more questions, please? You're not afraid to answer, so you can even try with difficult ones. Okay, look, if there's no more questions, we are very open to. There's one more, okay.
There is one question from George. Are you planning to accelerate the M&A deal flow with the growing cash pile or raise dividend?
Yes, we are doing this. We are effective with M&As. Under review currently, we had 150 entities. Yes, that's the pipeline. But of course, this is just the initial pipeline without even valuation discussions. Usually it drops down very quickly to about 20, 30 with whom we discuss initial evaluation, and then this list drops down to below 10 with advanced discussions. but we are all the time generating new ones. Yes, so the idea is to keep the M&A flow up and running, not only this year but in future years as well. Yes.
But at the same time, we're not forgetting about the dividend, yes. And as I mentioned during the cash flow part of the presentation, this year we recommended to the supervisory board, and they accepted and recommended to the shareholders meeting to pay 1 zloty per share. So it's 33% more than we paid last year. Okay, so the dividend level is, let's say, following the profit level so far. And I think we can do both. Yes, we can finance the M&A activities and still have, let's say, enough to pay a regular dividend, what is one of our priorities as well.
Yeah, that's what Martin says. It's the commitment. Yes, so we don't want to stop paying dividends. Yes, we can imagine extraordinary situation where there will be huge acquisitions or something like this, but it's on the horizon, and we think kind of the prediction for the ongoing business is to continue paying dividends as the business grows, hopefully growing dividends, and continue more aggressively with the acquisitions than before. Yes, and we have a lot of room, as you've seen, in the cash and also in the leverage, which we have prepared on quite advantageous conditions. So there's a lot of room for expansion here. Anything else? Yes.
Is a spin-off of Payten in your long-term objective?
Yeah, so actually Payten is spun off, understood as it is a separate entity now, and it's operating as a separate entity. Actually, one of the targets to potentially, I understand the question, the background of the question is, would we consider parallel listing of Payten on some market? We are getting ready for it, even though there's no decision to do it currently. One of the conditions was the size of the business, which we have achieved because Payten is approaching, over 20 million in operating profit. Yes, so and EBITDA, of course, much higher. So we think this is a threshold where it was worth considering this topic. But still, we want to provide more value added in Payten, restructure the business more into more e-commerce, carrying type of revenues, type of business, to make it even more attractive for the market. That's one of the things. And second thing, we will be observing how the market and investors are treating ASEE as a company, the holdco company. If there will be a positive reaction to our strategy, then we might decline the listing overall. If we will be seeing a discount for the holding and not understanding of the sectoral strategies, we might want to gain some more recognition and more value from listing Payten as a sectoral entity. But I don't see this happening in 2021. Anything else? Good. Wait. If there is no more questions, I invite all of you, we can have chats, discussions. We are very open to communication with investors, with any of you. So if you would like to follow up in the future or have some reviews with us, then you're welcome. Maybe a side comment, we are thanking Marcin, who is taking another journey, but he's still until the end of April with us. Michał, who is also on this conference, will be replacing him. This is done within the group. Michał is 10 years with the company already, working with Marcin all the time. So we have a smooth transition here, and very, very positive. So but this was communicated to the market, so that's not a surprise. Excellent. Thank you very much, and hope to hear from you soon. And feel free to ask any questions offline later, or to have a conference if you're interested. Thank you.
Thank you very much. Bye-bye.
Bye. Kto zadawał pytania?